Hi, this is Joe Rabil. I'm here with Bruce Fraser. Very excited to do another swing trading workshop. It was very well received the first go around, right, Bruce?
It was fantastic. And we're going to do another swing trading workshop on a different stock, another case study, and we're going to add some aspects to it, tactical aspects from Joe's great work, and continue on with all the prior aspects of vertical charts and point and figure charts. So Joe, what are we going to do today?
Okay, so we're going to go into a specific trade setup that's a little shorter term than what we did the last time. Last time we had a bigger picture play, and then we showed a specific swing setup that was based off like a weekly pullback and, a pretty decent sized move in WWE. This time we want to go down to a daily chart. This is more classic swing trading, Bruce. And I'm going to go straight into the main points we want to cover today. So what we want to do, even though we're only going to be in the trade for a couple days, or at least that's the plan, we want to use the bigger picture. And I'm going to show my chart on a bar chart, and Bruce is going to show his point and figure method of using these counts as well as what I'm using in the momentum to support the trade. Even though we're looking at something that is very short term, we're always looking to take pieces of the trend rather than fighting the trend. We usually have a pretty big advantage if you play in the direction of the trend. So we want to cover that. I am going to go through my trend and momentum on two different time frames and just sort of explain that briefly. And then also I did want to touch on compression, because the goal using compression, and it fits and dovetails right into the Wyckoff approach, is looking to really get in and out of a trade as quickly as possible so we can compound that money. We're going to go through the point and figure counts on a shorter term basis. And I believe Bruce is going to use a 10-minute chart to show some specific targets when you're using swing trading. And then what we're going to do to finish up is we're going to go into the trade entry, the stops, and the targets. And what we want to do is do everything in advance. So all these points before getting to the trade entry, we want to feel very confident in that we can go ahead and put the trade on, plan a trade, and then execute it. So I'm going to go into the first chart here, and this is the Flex weekly chart. So we're looking at a trade in Flex, and I want to point out how key level this 20 level is. You see how this big breakout of this 20, and we're going to reference that as we go into the next few slides. But look at what's going on a momentum basis. We went through this long period going sideways, and ADX, which is a measure of momentum, is basically telling us that there's zero momentum whatsoever until we get to this point around the fourth quarter of 2022 here. And we start to see some strength start to develop. We see the MACD kicking back into gear right as we're starting to try and break out here. So these are the types of things we want to have supporting a trade, even if we're only going to be in it for a couple days in a swing trading method. I'm going to pass this on to Bruce now. We're going to go into his point and figure counts.
So we see here, Joe, a point and figure accumulation structure in the yellow shaded area that goes from July back to March. This does not encompass the entire period that we just looked at on the vertical chart weekly, which is a very impressive chart. We are identifying causal structures that can give us counts. And we see here that this accumulation count, 23 columns across, one box reversal, 50-cent scale, gives us a count. And then we take it from the far right pullback into the beginning of a new important uptrend over to the stopping action of the decline at $15, just above the 23 number there. That counts up to 25.50 to 26.50 as a near-term objective on a daily point and figure chart. Then you see in the green column, the green shaded area, another accumulation. We call this a reaccumulation structure. This is 12 columns across, and we take it from the last pullback before the uptrend begins over to where the accumulation or reaccumulation starts above the number 12 there. That's 12 columns across, gives us a count up to 22.50 to 25. Notice those are roughly equal counts. We would call that a stepping stone reaccumulation confirming count. and they match each other. And that would be our objective on a swing trading basis on the daily chart. And Joe, take it over.
So what we want to do from there, so the most important thing we want to bring up at this point is I'm looking at this level. So here's the 20 level right here. And we just referenced two different things, the vertical bar chart, the candlesticks, as well as the point and figure counts that are telling us we have room up into the mid 20s. So the fact that we have that in our favor makes me feel a lot more confident of trying to play a short-term swing trade. So from that standpoint, I know I have the wind at my back. Now, what I like to look for when I'm using momentum is I want to measure the strength of the up move. And I use that in a couple different ways. And then I also want to look at the strength of the decline. What kind of a pullback? Now, on the upper time frame, the daily on the left, I'm going to measure the strength of the up move. And then during the decline, I'm going to go to the smaller time frame and measure the strength of the decline. Because what I'm trying to figure out is, do I have power on the way up? And did any of that power exit on the way back down? So if you look at what's taken place here, we've got a pretty strong move to the upside. We're breaking away from this key 20 area. And then we get this minor pause. We get lower high, lower high, lower high. Three lower highs in place right above the breakout area. We can also see, and notice what's going on with the MACD. MACD hits a new high, and then on the pullback, it actually holds its signal line. I call this a pinch play, where the MACD is pinching in towards the signal line. And it's very attractive, especially after you're coming out of a consolidation, or in this case, a big breakout area. Notice also that the green DI, which is measuring the strength of the buyers, is going to a new high here, or at least after being under 25, breaks out and then pulls back and is well above that key 25 area, while the ADX line itself is crossing above 25. So we've got a lot of things working in our favor on the higher time frame. On the lower time frame, we're pulling back in the MACD and working off this overbought condition, but look at what the ADX is doing. ADX is dropping way, way down. As this is pulling back, we're not showing any strength in the sell side. So this is measuring this ABC decline, and the sell-off is just not very strong. That's why we have a low ADX. So that's what I like to see, is strong ADX on the way up and weak ADX on the way down. A lot of this stuff is covered in my course. I can't give all the details to that, but on a short video like this, but just suffice it to say, we're looking for strength on the way up on one time frame, and then weakness essentially in the ADX on the way back down. Now, I do want to mention one other thing about this trade, and that's the fact that we're talking about compression, and that's when I use NR7 bars. That's narrow range 7. That means if I look at this bar and I go back a total of, including this bar, I go back 7 bars. If it's the narrowest range from high to low, then it's considered an NR7. What happened on this stock that really caught my eye is after breaking through this 20 level, we had a minor pullback that had back-to-back NR7 bars. And when you get that much compression in place, you're essentially setting yourself up for something explosive to emerge afterwards. So the main reason why I like compression patterns is that I'm looking for the ability to compound the money as quickly as possible. Like, I don't want to have to be in a swing trade for any longer than I want to. If I'm in and out, and in this case, a day or two at the most, then I'm really doing my job, because I can move on. I don't have to take a lot of risk with the market. I can get in and get out. I call it hit and run trading. And that's really how we want to take advantage of this. Now, before I enter a trade like this, I need to know what my counts are. So I'm going to pass this off to Bruce again, and we're going to go into a lot more. He's going to go into a little bit more shorter term detail to give us an idea of whether the counts meet the criteria we need to take the trade.
Thank you, Joe. And compression, or absorption as the term would be used in Wyckoff, really can be seen in the point and figure structures. And here we're looking at a 10-minute point and figure, which shows that point and figure works in the smaller time frames, does really good counts, and has a fractal quality to it. You see here in the light blue shaded area, which is the early part of November, that there is a count across that area with a classic Wyckoff structure: sign of strength, back up. You count from the last pullback over to the initial decline, which sets the range of the count area, 23 columns. And you go 23 times 1 box reversal times 10.1 or 10-cent scaling gives us a count objective of $2.30. We count from the low and from the pullback, and that gives us a count 2150 to 2220. Beautiful structure, all occurring in a 10-minute time frame on the point figure. Then a jump up and out, which results in another area of compression, using the term that Joe just used to show on the vertical charts. This is a smaller structure, 14 columns across, taken from the last pullback in the yellow shaded area over to the first, which sets the range. This gives us a count, 14 columns, $1.40 here. We take from the low in the count line, 2190 to 2220. Notice how these two count areas confirm each other. Stepping stone reaccumulation confirming count. It went exactly to 2220. It stopped there. Note after the stopping at 2220 that there were two very sharp pullbacks in the point and figure chart, which shows that this count area was a good count. And the sharp pullbacks showing downside volatility say, expect a decline of sorts to follow. I believe the V bottom that we had here is the result of the fact that we still have higher counts ahead that we saw on the daily point and figure chart. And so Flex can continue to work its way higher without building big counts to do it. Joe, I turn it back over to you.
So this is really outstanding because I love how the work that Bruce is doing dovetails into what I'm doing. We're looking at compression in two bars here, but if we go down to an intraday chart and do a point and figure count, we can really see that low volatility building up and forming this sideways line essentially that builds us the upside count. Now, the main point I wanted to get across here for this last slide is I've got the same slide. Everything's really the same. I know I've got a setup. I'm going to go into a little detail on the entry and all, but the most important thing is that I want to know in advance that I've got the big picture pattern in my favor, number one. I also want to do the work on the upside potential using the counts and say, is it really worth taking this trade? Yeah, I've got everything in my favor, but is it really worth doing? So I'm going to always look at the risk of the trade. So the entry here would be taking out the high of these two narrow range bars here, which is approximately 2080. The stop would go at the low of that, which is about 40 cents away, which is around a 1% risk. Now, the targets would be 2% and 3%, or 2R or 3R, 3 times the risk or 2 times the risk. I always say we have to have at least a 2R potential to want to take the trade. Well, based on what Bruce's work is showing us, we know we have at least a 2R, but we can go for a 3R in this instance because of all the accounts that he did. It gives us a really high probability of reaching this 22 target. So we take that risk. We've got 40 cents and we want to get in and get out. When we swing trade like this, we want to take explosive moves and immediately exit our full position. We're not looking to trail a stop or anything like that. So, you know, this is the type of thing that I think as you learn, you can learn to get in and out and do this hit and run trading this way. So I hope everyone enjoyed this swing trading workshop. I certainly enjoyed it, Bruce.
Always a pleasure, Joe. I look forward to doing more of these with you.
Absolutely. All right. Well, everyone, good trading.
Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.